Non-farm payrolls rose by 372,000 in the month of June, well ahead of economist estimates. Amanda Gotti and Lakshman Achathan are still with us. Amanda, back to you here. So if the jobs market is going to slow down in coming months, and the Fed is still going to be out there raising rates like they were, in terms of positioning for the markets, where should one go?
Well, we're still playing a bit of defense here, although I have to say the contrarian in me is starting to get a lot more interested with valuations compressing as much as they have been. But in general, we're still trying to play a bit of defense given the uncertainty around the recession and how fast things are going to actually slow down. And so what that really translates to is larger over smaller in terms of capitalization, U.S. over international. In the international space, we actually like emerging markets. I know that seems a little counterintuitive here, but we're seeing some bright spots certainly in emerging markets and a lot more stimulus coming into that area at a time when the rest of the world is tightening. So we think that that's actually pretty well positioned in terms of a defensive slash offensive sort of play. And then growth over value. We think value has had a tremendous run here, of course, on a year-to-date basis, but we do see signs that that's starting to fizzle out. So in a slower growth world, we do think investors will start to pay up for growthier exposures.
Lakshman, should we at all be concerned with labor force participation kind of oscillating around this kind of 6.2 to 6.4%, 62.2 to 62.4% range, particularly as we were looking for a general move higher, but didn't get that?
Yeah, I think that is, when you're looking at the backdrop for the jobs market, that is notable. Look, we've had a lot of people left the workforce for the COVID recession, record amounts, and many of them have now been returning, and you're seeing that, and that's part of what's going on with jobs growth. However, there's a lot that just permanently retired, and we have a tight labor market as a result. This certainly, I think, anecdotally or partially explains what we're experiencing. If you're trying to work with somebody, hire somebody, or if you go out and you see that there's not a lot of staff at certain service organizations, that's what you're seeing is the labor market is tight because not as many people returned to the workforce. Now, that does not mean that jobs growth is not slowing. It is. In fact, today, in the household survey, I was just looking at, we actually lost jobs, right? 300,000 plus loss. And the labor force went down a little bit, but on balance, the unemployment rate stayed the same. Now, and when you look at year over year non-farm jobs growth, that is also in a slowing trend, even though it's stronger than expected today. So all of this is consistent with a cyclical slowdown in the economy that has been going on a lot longer than I think people appreciate. And those can resolve in either a recession or a soft landing. Now, the path to a soft landing, avoiding a recession, becomes extremely narrow if the Fed is tightening, which they're doing, and so also some QT. And when you talk about the global economy just now, there are a couple of places that are easy. China's trying to be easier, Japan's trying to be easier, but by and large, central banks around the world are actually following the Fed's lead and tightening. So there's some risk here. I think it's material risk to the global economy in this downturn.
Amanda, do you think we'll get that economic soft landing here in the U.S.?
Well, I sure am hoping for it. I mean, if I could get my Christmas wish granted in July here, or even by Christmas time at the end of the year, I'd love to see a Fed pause come into the equation. The market is certainly suggesting that we might get a Fed pause by the end of the year. The probability of a rate hike in December has fallen quite a bit here. And so, I think if we get a Fed pause, sure, I think we can see a soft landing. But the odds of that happening based on history are pretty low. Very few instances where we've actually seen a soft landing. That doesn't mean that I'm overly bearish here. I just think we have to watch what the Fed does very, very carefully. That to me is the single biggest variable in terms of the market's path forward. How much more aggressive does the Fed ultimately get versus where the market has already priced or adjusted to? Market saying 75 in July, another 50 coming in September, another 25 after that, and then potentially a pause. So if that plays out, I think the market can handle that very well, and ultimately it's a soft landing. But there's still a lot of unknowns as it relates to that.
Amanda, if the Fed signals that pause, if that pause does in fact happen, is that the type of thing that ends the bear market in stocks?
100%. We've seen 5 to 6 multiple points of compression in terms of forward P on the S&P 500 so far this year. I think we add easily 3 to 4 multiple points back overnight, all else equal. I think that absolutely is the critical thing in terms of getting this market rally engaged. It doesn't solve everything, right? It's not. There are plenty of other issues to keep investors up at night, but I do think that the Fed is absolutely in the driver's seat in terms of the bear market and the path forward.
Lakshman Achuthan and Amanda Agati joining us here this morning to help us break down all of the data that's come forth from the Bureau of Labor Statistics within the June jobs report. Thank you so much for taking the time.